Hi everyone, let's go through my low time frame scenarios including potential trading setup. So on the low time frame I have two scenarios that would fit the medium time frame count of this being a 1, 2, 3, 4, 5 with price now potentially being in this wave 4 after hitting a beautiful target of the wave 3 being the green line over here, the 3.236 trend-based fib extension. Now, as you can see, I have two scenarios, one in purple and one in yellow. And that is based on the fact that the move up over here looks to be a three-wave structure. And then there's basically two other scenarios that can happen now. Either we have a three-wave structure in the X before another three-wave structure in the Y, or this can also become a three-wave structure in the W, then another three-wave in a expanded flat B, and then a five-wave impulsive move for wave C. You can see that the targets are a little bit similar, but of course there's a big difference in how one can trade it, because trading this wave X is actually very difficult because you don't know if price might move to the downside even further for a potential wave B. So I never really like to try and trade a wave X, and also a wave B has a better risk to reward ratio basically. So that is why the potential trading setup over here could be interesting, that the target area, or the most common target area for a wave B, is in between the 1.236 and the 1.38 Fibonacci taken from the low over here to the high. A rare target of wave B is the 105. And then one could enter potentially over here. We could wick into this support area, a daily naked point of control here as well. Stop loss somewhere below. We don't yet know exactly, of course. We have to base that on price action. And then we can trade it for a wave C, of which the target area can be seen over here. It's basically the yellow area, which also includes my other target box over here between 22.1K basically and 21.6K. So that is quite an interesting area to then trade a potential expanded flat wave B to the upside. And for wave Y, you can see the target areas basically in between the target boxes. We found resistance of the white target box over here after we went through. We now found resistance. But wave Y over here is just above the white target box and basically hits the blue target box. So we could wick inside the blue target box and then move to the downside, because in the target box we have at least two daily naked point of controls over here, as well as the range value area low of, well, a range that I don't have on my chart at the moment, but there's different confluences over there, as well as, and that is maybe more important to show, the medium time frame Fibonacci, which is the 382 and the 0.5, which are very important targets for a potential green wave 4. So the 382 and the 0.5 over here with the target box in the middle is a very interesting target, as a wave 4 tends to end in between the 382 and the 0.5. Candles are officially not allowed to close above the 0.5, as then it might not be a wave 4 anymore. So that is why another potential trading setup on the medium time frame is entering somewhere at the bottom of this target box or in layers, with then the high, the stop loss at least above the 0.5, but I now put it above this wave 4 over here, and then potentially trading it all the way down for this green wave 5 over there. Now, as this could be a potential wave 4 correction, it can take a little bit longer, and what you see on the chart right here might only be the first part of a wave 4 correction. So basically these three waves can be followed by another three waves and then another move up. So this might be way too short in time for a wave 4 correction compared to wave 2. Well, wave 2 was very short and also very impulsive, quite high. So wave 4 might take longer and be more of a sideways type of structure. That's the rule of alternation in Elliott waves. But another thing to keep in mind is that this potential wave 3 was very long in time. Just look how much time it took for this potential wave 3 to form. And wave 4 has a relationship with the wave 3. So the relationship could be about the 0.618 and the 1-to-1 fib time taken from the high of 2 to the low of 3. So basically what I'm saying is that wave 4 could potentially take a while, but of course we are traders. We take it as it goes. We trade the probabilities, and currently this is what I am looking at. Now, for my detailed low time frame count, check out this video, and for my 3 high time frame alternative scenarios, check out this video, including also my preferred scenario, by the way, mentioned in that video on the higher time frame. Thanks for watching and subscribing, and see you at my next video at 7 p.m. today.